It's a green day for the banks. I will get into more detail as we look at what analysts say, and they say that they expect the market's upbeat tone to hold thanks to a still supportive backdrop that continues to drive buy-side interest. But all eyes are firmly on corporate earnings. Chinazom Izuora, the Senior Associate Investment Brokerage at Parthian Securities, joins me now for more on the market. Thank you so much for your time, Chinazom, and just to get your sense of what, what's shaping sentiments in the market now. Yes, we know that the numbers, Q1 numbers have been are coming in, but how much longer do you think that we're going to see that play out, and are there other catalysts to continue to keep the market afloat?
All right, thank you for having me. So, so far we've started to see numbers trickling in. We've seen some numbers for some industrial goods companies and some consumer goods companies. The banks we might see a bit later, especially the banks that are going to be doing audited half year. Those might come in by mid or late August. But so far, the sentiments we've seen, and it's in line with expectations, for the industrial and consumer goods companies, we're seeing increased revenue. We're seeing those that had FX losses are returning to profitability based on the fact that Nigeria has a more stable, rational FX environment. So we've seen that. So we've continued to see positive sentiment for industrial goods, consumer goods. There's still a lot of buy interest with the banks. Although sentiments were that with FX stability, the banks might not post the magnificent numbers they gave us in previous years. But we still continue to see a lot of buy interest because the banking sector remains one of the most profitable. So, and they're generous with dividends. So we continue to see a lot of buy interest and expectation in that space.
Would you say the rally we're seeing now is more broad-based, or is it concentrated on just a few large caps?
So the large caps have definitely been driving return on the ASI, just because of their size. So they continue to largely impact the movement of the ASI. But we've actually seen the rally across board. We've even seen penny stocks that in previous years we didn't see a lot of transaction volumes in, doing volumes and posting impressive results. So we're optimistic that that's going to continue going, but we don't know how long it will last.
That's kind of been like a trend in the past 3 years. One or two penny stocks just shoots up, and then we see that it does so well, posting serious numbers. But when you look at what we're seeing play out in the market now, do you foresee any pullback risks, or as investors continue to reassess the valuation of the levels of the stocks post the results?
We're definitely expecting it because the movement of the equity market is not a straight line. So we're going to see that volatility. We're going to see people take profit. So it's expected that when you have companies with 200, 300% year-to-date returns, that investors are going to take profit. They're going to want to take some of that money off the table. So we expect that pullback. But if the numbers and the corporate actions support the rally we're seeing, then when that pullback happens, it might not be too large, and then you can expect that if Q3 and Q4 numbers continue to be strong, you might also see prices returning to those levels, even if there's a correction.
But would you say that the retail segment is contributing significantly to the volumes that we're seeing play out here, or is it still more largely institutional flow?
So I actually see that there's a lot of retail participation, even because of the companies that we're seeing increase flow in, and the sizes of transactions in those companies. So for us in the market, we can tell that there's a retail push. But in most of the large cap, the banks, a lot of what moves those segments are still institutional. Because it's institutional volumes we continue to see in some of those blue chip companies.
Okay, finally, as we wrap up now, how do you think the high interest rate environment will impact sentiment for equities down the line for the rest of the second half of the year?
So we already saw increased participation in the equities market just on the back of yields in the fixed income space coming down. With MPC choosing to hold, we did see like volumes like slowing down, but we expect that if the MPC decides to cut or yields continue to decline, a lot of savvy investors are going to come looking for attractive returns in the equities market.
All right, then. Thank you so much for your time. Interesting times in the market there. You just have to be attentive to see where, the needle is shifting to. But thank you so much, Chinazom Izuora, the Senior Associate for Investment Brokerage at Parthian Securities.